All right, welcome back, everybody, to another deep dive. Today, we're going to be taking a look at this tool that people have been talking about, the Pi Cycle Top Indicator.
Yeah.
And for you listeners at home,
Hmm.
you want to get ahead of the curve when it comes to understanding Bitcoin market cycles.
Absolutely.
And this indicator is really interesting. So maybe we can start off by you kind of explaining
Yeah.
what this Pi Cycle Top Indicator even is.
Yeah. So the Pi Cycle Top Indicator, it's really all about connecting Bitcoin's price action to these cycles, much like we see with pi itself.
Well-
It's very cyclical, never-ending number, and the indicator uses two moving averages, the 111-day moving average and double the 350-day moving average.
Okay.
And the 111-day comes from pi multiplied by 35, so roughly 110, but rounded up to 111.
Okay, so we're talking about moving averages, one that represents a shorter-term price movement and another one that represents a longer term.
Exactly.
But how do those two moving averages help us spot these tops in the market?
So when the 111-day moving average crosses above the 350-day moving average, doubled, of course, that is often a signal of a potential market top.
Oh.
What that means is, basically, it's saying, the short-term enthusiasm is outpacing the long-term trend.
Yeah, like we're getting a little bit ahead of ourselves.
Yeah, think of it like a rubber band stretching. At some point, it's got to snap back.
Okay, yeah, that makes sense. But I mean, this sounds good in theory, but how do we know?
Yeah.
How do we know that this crossover is actually reliable?
So if we look at the historical data, this crossover has remarkably predicted several major Bitcoin price peaks in the past. We saw this happen in late 2013, early 2017, shortly after the market saw significant corrections. The same happened in late 2021, preceding the downturn in 2022.
Yeah, I mean, it seems like this thing has a pretty good track record, but I mean, of course, there's always a but, right?
Right.
So like we can't just rely on the Pi Cycle Top Indicator alone.
Exactly. This is just one tool. It's best used in conjunction with other indicators and good old-fashioned market awareness.
Yeah, so this is just kind of like one piece of the puzzle.
Exactly. Not the whole picture.
So what would be some other indicators that people should be taking a look at? I know you've mentioned RSI and MASD.
So we can start off with the Relative Strength Index, or RSI, which is like a momentum gauge.
Yeah.
It measures the strength of these price movements.
Okay.
So think of it like a speedometer, Is the market moving fast? Is it moving slow?
So the RSI is kind of telling us how fast the market is moving.
How strong are these movements? And then we have the Moving Average Convergence, Divergence, or MASD. And this helps identify potential buy and sell signals by analyzing the relationship between two moving averages, not the same ones that the Pi cycle uses.
Gotcha. So it's just another way to look at moving averages.
Exactly. And see, okay, are we trending up? Are we trending down?
Yeah, I mean, it's interesting. All these different indicators we have, and it sounds like the main point here. It's just to not rely on any single indicator.
Exactly. It's about using them together to paint a clearer picture of these potential market shifts.
And I think that's really important for listeners to hear, because
a
lot of people, I think, get caught up in just one indicator, and they put all their faith in that. But really the best way to approach it is just look at a bunch of different things.
Exactly. You want to get a holistic view of what the market's doing.
So how would you say knowing about the Pi Cycle Top Indicator empowers the average person listening?
I would say it provides another lens through which to analyze the market. We're not trying to predict the future here, but we are trying to make more informed decisions.
So it's all about getting more information so that you can make a more
educated decision.
Okay, so it's another tool to help navigate these ups and downs.
Precisely. Informed decisions are always better than impulsive ones.
Absolutely. Yeah, I mean, nobody wants to just be buying and selling. On a whim, you want to have reasons. You want to have data. You want to have some kind of,
Exactly. Yeah, you don't want to be ruled by your emotions.
Yeah. You want to have some kind of logical system in place.
Exactly. Yeah. Having that plan is super important.
So to kind of wrap things up here, we've learned what the Pi Cycle Top Indicator is, how it uses those two key moving averages, the 111-day and the 350-day. And we've talked about its track record of identifying potential market peaks.
Yeah.
But again, just to emphasize one more time, it's not a crystal ball.
Yeah.
Right. We need to use this along with other tools, and we need to maintain a healthy amount of market awareness. But for all of you listeners out there, I just want to leave you with this one final thought. What questions does the Pi Cycle Top Indicator raise for you about Bitcoin's price cycles? And how would you personally use this knowledge to navigate the market? There's this whole world of financial discovery out there. So go out, explore, learn. We'll see you back here next time
Sounds good.
for another deep dive.